Hi there. In today's session, we are going to discuss how to appeal your property taxes. And we're primarily discussing Travis County, and Williamson and Hayes County should pretty much fall in line here. But specifically, we are talking about Travis County, so website links and things of that nature, examples, will be in Travis County. But again, the gist of this all translates across to Williamson County, Hayes County, and pretty much most counties across the state of Texas. Now, a little bit about my background. I actually started investing back in 2000, right before, or 2001, I should say, right around 9/11. And so we've kind of been in up markets, down markets, and everything in between. I've done, fix and flips before it was so popular on HGTV. I've held rental properties. I've done lease options. I've been involved in condo conversions, large multiplexes. So you name it, and I've kind of been around it. My husband and I have also built several online companies that have generated over 7-figure annual revenues. We built a digital marketing company that is an email platform, and we've also built some training programs, and I've spoke to real estate investors and trained them across the country and several other countries as well. So I have quite a bit of different experience here, and have personally been involved in my own property protests, tax protests, and have helped countless clients with the information to successfully protest their own taxes. So let's kind of dive right into the meat and potatoes here. And the first question that a lot of people ask is it even worth it? And I was actually at my dentist maybe 2 weeks ago having this exact same conversation, and he said, I've done it a couple times myself and, didn't really have good results. So we hired a company, and then we just didn't bother with the company after a certain amount of time. And my wife and I just figure that eventually we're going to have to move out of our house because the property taxes are going to push us out. And that's just kind of life as we expect it to be. And it is what it is. And I thought, gosh, that's pretty sad because it's not a lot of work, but people are just so, we've kind of all just thrown our hands up and are like, okay, well, the government's going to get their money and there's nothing we can do about it. So I'm kind of here to help you take back a little bit of control where we can, or at least try to take back some of that control. So a couple of points. Number one, property taxes rise frequently. In fact, they pretty much rise annually. In some cycles when the markets were crashing, I've seen them stay stable, but I have yet to see a county, city, municipality, taxing authority, if you will, reduce property taxes without some sort of nudging from the homeowner. So they're going to rise most likely. Best case scenario, they stay flat. Properties with higher taxes also have a market disadvantage when you go to sell. Now, appealing your taxes can also put hundreds or thousands of dollars back into your pocket. So if you get your tax bill reduced, you might, drop $2,000, $3,000, $4,000, $5,000 off of it in some cases. Those are very rare cases, and I'll go into some examples a little bit later where that happens. I wouldn't expect that on an annual basis, but a couple $100s could pay for a family plane tickets for your family to take a vacation, or just put towards your principal and your mortgage, what have you. So it's worth it. It's your money. You should be able to keep as much as you can. You may be able to get tax escrow rebates and or possibly a lower monthly payment. And again, if you don't want the lower monthly payment, you can continue to make that payment and just pay down your principal faster and then save thousands of dollars in long-term interest as well. Also, property taxes are the only type of tax that can be appealed. It would be kind of funny to try to go appeal your income tax and see what happens there. I'm guessing if you kind of made some waves there, they'd dig a little harder and probably figure out how you owed them more money. In Texas, statewide in 2018, 59% of property tax protests were resolved in the informal hearing process. 80% of those involved a reduction in value. So the vast majority of protests are successful. So it just makes sense to, at the very least, try, especially because there's no cost to protest. And some good news, starting with the 2020 property tax season, the ARB, or Appraisal Review Board, cannot increase the value of your home. So let's address the other question that I'm sure lots of folks have heard lately. But I heard that they're not raising values this year. Let's kind of back up and talk about what's going on. And there's really a political battle, which is essentially fueling this back and forth that you may have read in various publications, between ABOR, which is the Austin Board of Realtors, and TCAD, which is Travis County Appraisal District. So ABOR basically won a lawsuit blocking the county from using their data. And the reason this is important is because Texas is a non-disclosure state, meaning all of this information is private data, and it is not the right of the city, state, county, or any government entity to know that information. Now, if you were to voluntarily share that information, that's one thing, but they have no right to that information unless somebody has personally shared that. Other states, you can go online. For instance, Florida, you can go look up a property and you can see everybody who's bought it, when they bought it, how much they paid for it, how much they sold it for, and so on. But Texas, again, is a non-disclosure state, so the county did not have right to that information. Yet they were using that in their appraisal process, or in determining the appraisals. Although that residential properties will not be appraised, some owners are still going to see increases in their taxable value. For example, let's say the taxable value hasn't increased, the market value hasn't increased, because let's say you had a homestead exemption. Well, a homestead exemption, as of this tax year, allows them to increase your assessed value a maximum of 10%. According to the Travis chief appraiser, she actually said that you could pretty much see a 10% increase in your taxable value in 2020. And the crazy part about that is that different parts of Austin or Travis County have appreciated at different levels. So you may be in one part of Austin that has appreciated at 10, 12%, but other parts of Austin may be at 3, 4, 5% or maybe flat. So it's important to watch that, because just because they can increase it 10% a year doesn't mean that your property value has increased 10% year over year. So it's really important to keep an eye on that, because every year you keep that down, it's just a little bit longer that you keep that tax basis a little bit lower and keep your bill a little bit lower. So a little bit of information about property taxes in our area. Homes are assessed in January and February. You'll probably see the assessments in the mail the beginning of April, and the appeals must be filed by May 15th. Now, this is kind of the standard, this is the policy, this is how it's supposed to be. I will say that this year there may be some wiggle room on some of this. There may be extensions, there may be delays. I'm not sure, just due to everything that's going on. But unless you've read it or confirmed it from the Travis County Appraisal District, TCAD, count on these as your dates so that you don't miss out. Okay, the truth is you have a very short window of time. In other words, you get that information in April and you have until the middle of May to get everything together and file your protest to try to reduce your tax bill. So let's talk a little bit about assessment versus value. So assessments are usually based on a percentage of market value. So they may say, hey, the market value is this much, but because you have this exemption, this exemption, this exemption, and this exemption, your assessment is this amount. And then to figure out your tax, they multiply that by various entities. So for example, if you look at your assessment, or even if you log onto the website when it's not kind of in the middle of this tax season, you'll see a number of lines and it'll have that assessed value, which incidentally by law, all of the taxing authorities have to use that same assessed value. So the schools have to use it, this county has to use it, the city has to use it. So that value has to be used across all taxing authorities, which is good. So you're not having to dispute your assessment across 8 different entities. So you might see that number times 0.002 for one, for let's say schools, or 0.04 for another entity. Add all those numbers up and that's what your tax is. Now the other side of this is value. And the value is what your home is likely to sell for based on comparables in the area. So the assessment is just what you're going to be taxed on. The value is how much money you could get. Now, in a perfect world, for everybody, in a perfect world, those would align, and the tax basis or the tax percentages would be lower, right? So there's one number and we're not having to juggle, but that's just not the reality. So the value is actually what your home's going to sell for. So if I come out and do a CMA because we're getting ready to list your home, I'm going to compare your home to all the homes that are currently on the market and that have recently sold and say, this is what I think we can get for your home right now today. And that number could be different than the assessed value, especially if you've had the homestead exemption on and you've been in your home for some time. And comparables are also homes that are most similar to your home that have recently sold. So in other words, a home that's 3 miles away that's 1,000 square feet bigger is not going to be a comparable. A home next door that's 1,000 square feet bigger is probably not going to be an apples to apples comparable. So you need to understand how to do your comps. And just to give you some basic guidelines, you're going to want plus or minus 10% in square footage, similar bedrooms and bathrooms, similar construction, similar quality in terms of updates and so forth. So just kind of apples to apples is how you're going to do that. And then for anything that's kind of different, you're going to plus or minus. So if you have an extra bedroom, you're going to get a little bit of a credit. If your house needs some updates, but the comparables have been updated recently, then you're going to lose a little bit. So it's not quite as cut and dry as just saying, oh, here are the 3 most recent sales in my neighborhood. This is what my home's going to sell for. There's a little more to it, especially if you want to get top dollar. Okay, here's a sample tax assessment notice. And this is 2019 Notice of Appraised Value. And you see the information's blocked out, but you can kind of see here what the different exemption amounts were, what the taxable amounts were, and just kind of what each of the different, so you see Travis County, you see Travis County WCID number 17, which is the water district, Travis County Healthcare, Austin Community College, Leander ISD, Travis County WCID Steiner. So any of these places that get some money from you are going to be listed out here, and you can kind of see what that looks to, what that flushes out to be number wise. So a couple of things. First off, is your property description correct? Does it have the right number of bedrooms? Does it have the right number of bathrooms? Is the house square footage correct? Now keep in mind the county measures outside, your appraiser measures inside. So the appraiser is probably going to have a smaller square footage than, like your personal appraiser, than the county, who's going just to do the measurement on the outside of the home. There's a plus or minus, I believe it's 5% number that's acceptable. So if it's off, if it's more than that, then you certainly want to address that. Any decks or porches, any acreages or your lot size, pools, waterfront, outbuildings, etc. And you might say, okay, well, if my bedrooms, I have 4 bedrooms and they have it 3, should I go fix that? Well, it's a catch-22. If you're thinking of selling, you probably want to update that information so it reflects it. But while you own the home, if it has misinformation in your favor, you may not want to go and correct that information. You may just want to let that be. Where some of this comes into play or might make a difference is like acreage and lot size, for instance. So if you're out on the lake, I've got a friend that lives out on Lake Travis, and a good portion of his quote-unquote lot is underwater. So he's kind of like, well, I'll sell it back to y'all, and then you can give me that rebate on my taxes because it's not usable. So what do you do with some of that kind of data? Is that really lot size since it's under the water and it's not like you can restrict people and have your own private beach or lake, sub-lake within the lake. So that's where it gets a little bit kind of sketchy or shaky. And you will see in some communities that houses will look real dilapidated on the outside because they want to keep that value real low, and then inside they've done beautiful upgrades and modifications. So it's kind of funny how people do some of that around here, but again, you want to make sure anything regarding your property description that's going to impact your assessed value is correct. So the next question is, are you getting your discounts? The first one is your homestead exemption. So the January after you purchase your house, you can apply for this, and it's important to do this because it limits how much the assessed value on your home can increase each year. If you're over 65 or the surviving spouse of someone over 65, you get an exemption. If you're a disabled, 100% disabled veteran or surviving spouse of a 100% disabled vet, you get an exemption. If you're a disabled homeowner or if you have an agriculture exemption, Not that that's probably likely in, Steiner Ranch or River Place or Lakeway, but there are places, or if you own land elsewhere, you may be entitled to an agriculture exemption. Now, you don't get these exemptions without applying for them, so it's important to review these annually and make sure that you're getting any discounts that you may be entitled to. So now the question is, should you hire an attorney or do it yourself? And this really comes down to personal preference. As far as fees go, the fee is generally based off of your tax reduction, and it's somewhere between 25 and 50% depending on the company. There's 3 or 4 of them that are pretty prominent in the area, so you can look up online and find them pretty much in the first few results on Google. Now, for example, they petition on your behalf, and if they reduce your taxes by, let's say, $1,500, your fee is going to range between $375 to $750. So you might say, hey, it's free money because I wasn't going to do it myself. I don't know where to start. I'm not interested in doing it, what have you. The downside is it's pretty simple to do, and you're giving up $375 to $750 to have somebody else do it. But if the alternative is that you're not going to do it, at the very least, let a company that's only going to take money if they're successful do that for you. Now, note that some companies are charging an upfront fee. The number I've heard is about $150, and this is credited towards your fee if they get you a reduction. Now, we can all guess and try to figure out why they've changed the model. It could be harder to get reductions. It could be because the county was talking about changing the appeals process, what have you. But take it for what it's worth. It's entirely up to you. There are other companies that are not charging that fee, so keep that in mind. And if you do it yourself, then it's just going to take you a couple of hours, generally 2 to 4 hours tops, depending on how much information you have or you feel you need to provide. So it's largely just putting it all together in a packet. Most of the information is pretty easy to get. As an agent, I'm happy to pull any of the comps for you so that you have that data, and you don't even have to spend the time looking up that information or trying to find that information. Now, how to file your own appeal. Property owners in Travis County specifically, whose values increased by at least $1,000 in the last year, are going to receive a notice of appraised value. Now, this notice contains 3 different values. The first is the market value, and this is what your property would sell for according to the county as of January 1st this year. So if you were to put your property on the market January 1st, this is what they presume that your home would sell for. The assessed value is the reduced value after any exemptions are applied. So your homestead exemption, your over 65 exemption, any of those things, that's going to be your assessed value. And then your taxable value is what you actually pay taxes on. And this is the assessed value minus any exemptions. And it's again, the value that's used to calculate your taxes for each taxing unit. And this is important because it's actually legislated that that number has to be the same. So the school districts can't use one number for your assessed value, but then the county uses another and the water district still another. So everyone has to use that same number, which is kind of why it's important that the county get it right, because everybody else is making their budgets based on that particular number. Here's just a sample of what the property owner's notice of protest looks like. And I've highlighted a couple of things just to take a look at. You have all these reasons for protest. The top is pretty self-explanatory. Who are you? The second is the property address. So section 3 and 4 are where it becomes a little bit where you've got to figure it out. So for instance, incorrect appraised market value or value is unequal compared with other properties. So these are kind of 2 of the common ones. But if you didn't receive your notice, maybe failure to send required notice, an exemption was denied, modified, or canceled. Maybe there's a disaster damage exemption. So you can look at those, but generally those first 2 are going to be pretty common in terms of reasons for protesting. So pull out your appraisal from purchase, especially if it was recently. If it was 10 years ago, it's probably not going to help you. But if you purchased in the last year or 2, pull out that appraisal. Ask your real estate agent or just contact me for listings on closed properties in the area for the last year. These should be similar in size and location to your home. And remember, they have to be prior to February 29th, 2020. So anything after February 29th would be considered in next year's appraisals. And again, sales should be as close to the end of February as possible, just because this is what it's most likely to, your home's most likely to sell for. But depending on the scenario, we do have that full year window. So March 1st, 2019 through February 29th, 2020 is that window where we can use those comparable homes. So you want to choose the top 3 to 5 properties that are most like yours, and plus or minus 10% square footage is a good starting point. And build a spreadsheet and then submit that to the assessor's office. Then, if you need to go through the appraisal review board, then you'll kind of take the next steps, if you will. So if you don't accept the settlement, so you go online, submit it, or you go in person, or you drop it in the mail, and you don't accept the offer, then you can basically have a hearing in front of the appraisal review board. And those are expected to begin in June of 2020. So I'll explain a little bit about this review board in a few minutes, but just understand that sort of the process. And the ARB is just a group of 3 everyday people that have said, hey, we're willing to come and kind of mediate between taxpayers and the county and help figure out what fair values are. So they're everyday people. They're not county workers. They're just people that have volunteered to kind of mediate between taxpayers and the county. So pretty much, and I've got a diagram here in a second, but the property owner sits kind of on one table. And if you think of a courtroom, right, you're sitting there and you're trying to plead your case to a jury or a judge, if you will, of 3. And you're going to basically give your information. The representative from the county is going to give their information, and the panel can ask both parties questions. They typically take about 15 to 20 minutes. After both sides have presented, the panel makes a decision regarding the protest. And shortly thereafter, you're going to receive a notice of final order in the mail. So obviously keep anything that you get that date, because things get lost in the mail. Things could get lost, period. So just keep all records that you have until you get the formal notice that it's been changed. You can appeal the decision of the appraisal review board in binding arbitration or district court if you wanted to continue to take it forward. So here's kind of a visual. So these 2 little folks here are husband, wife, and they've prepared all their information, and you need to bring in a copy for each of the appraisal review board members and for the county. So you hand your evidence packet to everybody in the room, and you kind of make your case. Then the county does the same. And the one thing that kind of isn't fair is that while you're making their case, they're able to pull new data and pull new information. So they kind of have a leg up. You don't necessarily get all of their data prior to walking in the door. But nonetheless, you kind of go back and forth and you make your case. And then the appraisal review board kind of talks amongst themselves. Maybe they ask for further clarification, or they want you to answer some questions. They have clarification for the county. Anyway, this takes a few minutes back and forth. And the thing is, you really only need to get one of these folks on your side. And I'm going to give you our case study here in just a second, because it's important to understand, or to have a real world example of how this worked. And so anyway, they all kind of come together, and then they ultimately say, okay, this is what our decision is. So you may get a good answer. You may get, well, we're keeping it where it's at. Or you may say, yeah, you know what, you're actually under appraised. So, it should probably be worth more. Now, my understanding is now, this year, they're not allowed to increase the assessed value, but in past years, that was certainly an option. So let me give you a case study. So we go through this process. My husband and I, we purchased our home in 2017, and we were very lucky. Like I said, I've been investing for a long time, so we did a direct mail campaign, got an owner who was motivated to sell. The home was in great condition, but it just needed a little bit of a freshen up, if you will. They owned it free and clear, and they just had moved out. It was rented for a year. Tenants didn't do any damage. They were great to the home, but they didn't want to buy it just because they didn't like the lot, honestly. So we were able to purchase the home, and I believe we purchased it for $515,000. This was February 17th, I believe, 2017. So the new assessments come out in April, and they've assessed us now for just under $700,000. So holy cow, this is insane. So we upload our information, including our appraisal. We're like, oh, well, this should be pretty easy. We can upload it online, no problem. They'll fix it. We're good to go. So we did the online protest, and they dropped us like $5,000. I about flipped my lid and said, you've got to be kidding me. This is insanity. So I called, and they're actually very helpful. If you call over there, you'll get somebody, generally speaking, that's very nice and happy to answer your questions. Just be nice in return. So I said, what in the world? And they said, well, it wasn't an arm's length transaction. And I said, what do you mean by that? And they said, well, it wasn't sold through a real estate agent. And that's a topic for another day, because especially the Board of Realtors is a private business industry, and it has nothing to do with the county, so they shouldn't even be considering a private company business in determining the values. But again, that's neither here nor there. And so what I did is I got together an affidavit of arm's length transaction, and the sellers were gracious enough to sign it and notarize it. And so I started to compile this case so that we could bring it with us. So into the meeting or hearing we go, and I've got all the comps, and this is where I learned that comps are only good through the end of February, because we had even more recent comps. And I learned a lot about the process. So we gave all of our information, including our appraisal, over to the review board. And then the county came back and said, well, here's my evidence as to why their number should be higher. And one of the things that's kind of infuriating is our home is about 3,600 square feet, and some of the properties they're using on the appraisal are 4,400 square feet, 5,000 square feet. This is not a comp. We're on a street, we're in the University of Texas golf community in Steiner, and the neighbors across the street are on the golf course, but we, however, are not on the golf course. We do have a green belt, but we aren't on the golf course. And they said, well, you're on a golf course street, so you have to be assessed at that street. I said, well, I should technically be assessed with the houses that share the green belt on the next street over, because that's really apples to apples, because I don't share in the benefit of the golf course, so I shouldn't be taxed on that. And on it goes about how it was very enlightening, because you kind of see how they evaluate this. And I said, well, you know, if I'm a buyer and I'm not going to have a golf course access, I'm going to pick this house over here that's $200,000 cheaper than the house on the next street over, still without a golf course. So then there's more back and forth, and they ultimately agree with our number, because that's what our purchase price was. But they said they wanted to add 6%, because since most transactions are done through realtors, they felt it was fair to tack on an extra 6%. Now, they reduced our value by over $150,000, so we really couldn't come back and argue too much, because, you know, we didn't want them to change their mind. But, you know, just some insight is they're pretty much overinflating everything by at least 6% across the board. And so ultimately we did get the reduction. But another thing to note is when the county sends you kind of their evidence packet, you can use that to prepare for the appraisal review board. But understand, they're not necessarily going off of comparable sales. They're going off of what they've assessed them. So if they've overassessed your whole street, it doesn't matter, because they're just going, they say, oh, okay, well, these 6 homes sold, and this is what we're assessing them at. Well, it doesn't matter, because it's not what they've sold for, it's what they're assessing them at. And also keep in mind that if you're disputing based on comparable sales, if you mark that and they don't produce comparable sales that support their value, then you also have the opportunity to decrease your assessed value. So if you have any questions about all that, feel free to email me or give me a call. I know it's a lot to take in, but I feel like kind of walking through that example is a little bit helpful. And this is just if you wanted any kind of spreadsheet, you could kind of create a spreadsheet. I typically would put the comps in, but this is sort of how an appraisal worksheet looks. So it's kind of a helpful way, because it's sort of what they're used to seeing. So if you can take that data and put it into a spreadsheet, it's certainly helpful. It's not required, but again, it's helpful. And again, you're kind of making your case here. So the clearer you can make your case and the easier it is for somebody to understand the data, the more likely you're going to have a positive outcome. Okay, and finally, a couple of tips for success. File in advance of the deadline. So if you get your information in the beginning of April, file as soon as you possibly can. If you are going to appeal to the review board, file for a date as early as you can. You want to be sort of in the front of the line, before all the frustrated, angry citizens are in front of them and before they've kind of heard it all over and over again. So the earlier you can be, the better. If you have any questions, ask the assessor's office for help. They're generally very helpful. If I hadn't called the assessor's office when they gave us that reduction by a couple of $1,000s, I would have never known about the arm's length transaction issue that they had. So because I called, they gave me the information and then I was able to cure that. Find out if you need to submit it on paper or online. It's pretty easy to file right now. You can do it online, you can do it by person, you can do it in mail. So if you can go in person, it's always better to get somebody in front of you to say yes or no, or to tell you no, I should say. But if you want to start online, file it online, and then plan to go to the appraisal review board if necessary. Always get a receipt or acknowledgement that they've received your appeal. You just want to make sure that you've got this documented, tracked. Just anything regarding a government entity or payments, anything of that nature, I always track. Years and years ago, one of my husband and I's business entities wasn't one that we did a lot with. It was just sort of a tax entity. And we had filed the paperwork for an S election, and we'd faxed it in, and they ended up not giving us the S election and said we never filed it, and we sent proof of the fax transmission, and they said, oh, well, we don't accept that. So from that moment on, I've done everything certified or just as much documentation as you can for acknowledgement so that you're covered on the other end. And if you win your appeal and your assessment is reduced, contact your servicer for an escrow analysis. You could have your payment reduced. Ultimately, you're going to get your money back. It's just, do you want it back now in the form of a check and lower payments, or do you just want it next year when they do your escrow analysis? It's entirely up to you, but it's your money, so you might as well get it sooner than later. If you have any questions, I am more than happy to help you. I'm happy to pull comps for you, kind of going in order of request. So please shoot me an email or give me a call, and I will pull those for you as soon as possible. If you do email me, make sure I send you an acknowledgement receipt because I get a lot of emails. I don't want to miss that for you. And I also would welcome the opportunity to help you or family members, friends, associates with any of your real estate needs. So please feel free to contact me. My cell number is 561-459-9203, and my main line is 512-593-1150. And you can see my email address on the screen. It's Heather Tankersley at magnoliarealty.com. You can also use Heather T at magnoliarealty.com. If this was helpful, and again, if you have any questions throughout this process or anything else related to real estate, please feel free to reach out to me. I look forward to speaking with you. Thanks so much.